Noon. Okay, great. And what brings you to New York? Because regularly you are actually in San Francisco, yeah?
No, actually, I've been in New York for 2.5 years now.
Mm-hmm.
So just give me 1 second. I'm just quickly writing the status update. Give me just 1 moment.
It will be kind of difficult because we're on air.
Just give me 1 second. I'm just quickly
Yeah, so we're on air. We're on air.
Okay.
Guys, we on air. We are experimenting with a new format, as you probably can see. It's completely new format. We used to do SEO webinars, and we've done it many of them. We have every great SEO here, and today we are talking about investment and investment in startups. We do have an angel investor with us, Eran Eyal. Eran Eyal from Eran, correct me if I'm wrong. You were born in South Africa, and you were start your entrepreneur career in South Africa.
Not quite. So I was born actually in Haifa in Israel. And when I was 9 months old, my parents moved to Durban on the east coast of South Africa. And then I lived for around 8 years in Cape Town and moved to New York about 2.5 years ago. And I live in Williamsburg, in Brooklyn.
Yeah, okay, sorry about that. So it was, I thought it was South Africa to Israel. It was Israel to South Africa and then to New York.
And my brother actually moved back to Israel a few years ago to start a venture capital firm.
Yeah, well, Israel obviously is a great place for this kind of things. We have plenty of entrepreneurs from Israel and plenty of startups, especially technical companies.
I'm working right now with 2 Israeli companies, and let me tell you, they're just incredible people to work with. Their work ethic, the amount of hustle that they put into their startups. They run their startups incredibly lean, and the progress that they make is amazing. But also, just in terms of their technology that they produce, it's mind-boggling. It's absolutely phenomenal. And actually, I'm really lucky that on one of the investments I'm working with right now, where we're actually raising a first round of funding together, is actually an artificial intelligence company where the CTO and the head of algorithms from probably Israel's most successful startup. So a lot of people think that Waze is the most successful startup in Israel, but in actual fact, there's a company called Binal, which is a mid-frequency quantitative trading fund, which is driven entirely by algorithms and artificial intelligence. And the CTO who wrote all the AI and the head of algorithms left to create this company. And I'm very privileged to be involved with these people. They're probably in the top 20 people in artificial intelligence in the world. So, there's amazing stuff that's happening in Israel. And that company, there are reports that Citadel tried to buy them out for $6 billion. It's double the value of Waze. Yeah, incredible. Very cool people.
Great to hear. Yeah, we really hear lots about Israel's success in tech industry. It's amazing. And lots of companies actually from Israel are outsourcing from the Ukraine in terms of development.
Of course.
Yeah.
There's great development in the Ukraine, Romania. There's amazing development. I work quite closely on a lot of the startups that I work with. I refer them to a firm here in New York where the entire back end and one of the co-founders is Romanian. And an interesting thing is actually I'm half Romanian. My father was Romanian. And it was purely circumstantial that I wound up working with Romanians.
Oh, it's really cool. Have you ever been to Romania, actually?
I haven't. My father fled Romania during the war when he was 7 years old. And I haven't been back to go explore my heritage, but it's something I'm incredibly passionate about doing at some stage in my life.
So Romania is pretty close to Ukraine. As soon as you come to Romania, and I hope it will be soon, you should visit Ukraine as well. We will make.
I have many talented Ukrainian friends who live here in New York. Very talented, incredible people.
Thank you. We are all of this.
Great. who just join us, we have a new format. We have an interview. We have two hosts, very different hosts, white and black, and we have only one investor here, angel investor. Okay, we'll go ahead with our format. I have a question, stupid question for you. I ask stupid question.
There's no such thing as a stupid question. We both know that.
I have a license for that. I can show you my license. Okay, angel investor. What is angel investor? I've read about it, but still couldn't get it. Could you explain your vision of angel investor?
It's a really interesting question. So, when you first raise money, there used to be this. There used to be the saying that you raise money from friends, family, and fools. And the fools are the people, the angel investors, who believe in you. But it's not a fool's market anymore. And I think that a lot of people burnt their fingers with angel investing. Angel investing is when a high net worth individual invests in it invests in anything. It could be a risky startup, could be a low risk, high risk startup, it could be growth, but it's investment capital coming from an individual who usually has high net worth or some value that they can invest. And actually, when you come to America, we really like to differentiate between two types of investors: accredited and non-accredited investors. And accredited investors are people who, for example, are earning a certain amount of money a year and above. Also, or they have at least $1 million in assets. And the reason for this is to make sure that people aren't angel investing their final dime, their money that they need to live off. So it's not just, a lot has changed since the Jobs Act was passed in recently. So now actually the average everyday man can invest, not just the accredited angel. But you do have a very big separation between accredited angels and non-accredited angels. And even then, there are sophisticated value-adding angels and there are unsophisticated angels. So the market is still kind of a little fresh. People constantly coming in, coming out, and learning a lot about the process, as am I, both on when I raise capital from angel investors or I've invested my own money. So it's a learning experience. And I think probably one of the most interesting things that's happened with angel investors is that there are syndicates now. And if you go to sites like angellist.co or angellist.com, you will actually see that you can actually join other angel investors in a kind of a little fund. So you almost form your own little fund together. And first of all, there's value in numbers because you're able to raise more money. You're able to take better deals. You're able to support the startups in a quicker way. You're able to enter deals that you couldn't enter normally because the amount that one angel would put in is too low, but a syndicate is larger. But I think one of the most valuable things is that a lot of the syndicates are run by accredited angels who are incredibly experienced. Some of them so experienced that they've made more than 60 or over 100 investments. Now, when you invest alongside someone like that, there's a certain level of surety that they have been through the ringer. They have seen good deals, bad deals. They've got a very strong vetting process. And what it means is that your due diligence that you have to do on the company is now reduced enormously because you can trust the due diligence that's being done by the syndicate and specifically the person leading the syndicate.
Is it close to what actually crowdfunding is?
It's exactly crowdfunding. It's exactly crowdfunding. It's the purest definition of crowdfunding, except it's a more sophisticated version. And if you think about this, this is not estranged from the way that venture capital works. Because when you go to venture capital, you have the leads and you have the follows. And generally, the people who follow either have a fund that is too small in order to lead and do due diligence and to be respected as a lead, or they want to minimize their risk, and they do that by co-investing alongside much larger investment firms, usually the top 30 well-known New York firms. And they'll say, well, you know what, if you get a check from one of those guys, we will put in $100,000 or $200,000 in, because we know that when Greycroft or Greylock or Union Square Ventures or Simon Ventures signs that check, or any of the other great seed companies. And by the way, there's 157 seed stage VCs in New York. Great ones like Metamorphic, Lyra Ventures, First Round Capital, really just the best. And when you look at these people, when they do the due diligence on you, it's so hardcore that it can be trusted by the follows. And the follows want to minimize their risk because of the size of their fund. And with such a small fund, you can't spend all your time doing DD. DD being, of course, due diligence. So it's exactly the same. It's an emulation of what works for the big boys and now works for the angel investors. And it's become a very interesting marketplace because in a space before where people had to raise from angels one by one by one, or you had to go to VCs, suddenly VCs are not seeing some of the deal flow as early as they used to because it's being snapped up by high net worth angels or by syndicates.
What is the best platform to choose the syndicate? Is it Angel Co or others?
There's a lot of them out there. There are two that I favor. Actually, three that I favor. One is not so much a platform. I would say actually two of them are not so much a platform. Funders Guild and Next Gen Venture Partners. Mostly because I know the people who run them and they deal with accredited angels only. And they are mature, they've been around for a while. And the nice thing about Next Gen Venture Partners is actually they've matured to the stage where they've actually gotten their own fund. So not only do they go out to their network of angels and network of VCs now, they have their own fund which can match. But when you look at the platforms themselves, there's only one platform that I know of that has only accredited angels. Now, it's difficult to get on. There's a very strong vetting process. They use a company called CrowdCheck to do all the due diligence. But when you deal with this platform, you know that every angel that you speak to is accredited. And that means that there's a lot of value behind that. It means you're dealing with a different kind of investment, an investor. And that's Seed Invest. Mm-hmm. Now, whilst it may feel that angel, when you go to angel.co, it may feel like that, but it's not because there are accredited and non-accredited angels there. And it's up to you to do the vetting. At Seed Invest, they've pre-done the vetting. But now Angel.co has matured so much that actually they have their own fund now. And they have their own syndicate, and it's very well capitalized. And the guys who run it they've been around the longest, probably pushing this agenda of being able to do crowdfunding. It's just very difficult to crowdfund on that platform if you don't know a lot of people already. Because trying to reach people, there's a lot of blockades trying to reach them. And Angel.co doesn't help you to reach them unless you're part of the syndicate. So when you go to Seed Invest, because they vet each one of the companies so incredibly, you can not only are they able to do a public offering where you're publicly able to bring in investors, they go out and market it heavily to their accredited investor database. They have about 27,000 accredited investors. What I can tell you is there are some platforms out there that claim to have accredited investors, but they don't. And they claim to do a lot of things for you, but they don't. The cool thing about Seed Invest as well is that actually, and this is kind of thing where it's cool, but it's uncool, they're a registered dealer broker as a company. This means, that they are able to go raise capital for you because they are registered to do so. Other platforms you'll find are most likely not. So, you've really got to do your research and do your due diligence because you're going to be married to these people. And it's good to also not just take money from these syndicates, but try to say, listen, can I speak to 3 CEOs who have raised from you? I'd like to hear what the experience was like. You should be vetting them as much as they should be vetting you. Same with angel investors. Don't be scared to go out to the angel investor and say, listen, can I speak to one of your investments? I'd like to see what you're like as an investor. You're going to be married to this person for a while. So it's best to figure out where you stand.
How to secure risks when you're merging with angel investor? So you check the person, but what else to do to find the right match?
From the startup side or from the angel side? Sorry, you broke up there.
From the startup side.
So from the startup side, the best thing that you can do is find a value-added angel. You're going to find two types of angels, and there's this concept of raising stupid money versus smart money that's always being talked about. There are some people, and let me tell you that in every round, you're going to have a little bit of stupid money and a little bit of smart money. Hopefully, the people who invested you the so-called stupid money are not really stupid because they vetted you and you're going to give them a great return. But the difference between stupid money and smart money is that stupid money is money that doesn't work for you. It's money that you have to take and make work for you. It's money just for the sake of money. It comes with no network, no connections, no opening of doors, no industry knowledge, all these kind of things. When you're able to go get smart money, and this should be the key, it should be a key thing for any startup, is that you shouldn't just be reaching out in a sort of a shotgun way, to angels and to investors. Even when you approach a VC firm, you don't approach a VC firm. You approach a partner in the VC firm who has done deals similar to you, or who has a background which can help you in what you do. So he understands the deal, or she understands the deal. They understand what you're doing, and they can offer a really tremendous amount of value from having been there and done there. Now, just like in a VC, that you should be vetting the VC that way, you should be vetting your angels in a similar way. And this is key because these angels can be an enormous resource to you. When I think about one of the companies I invested in about a year and a half ago called Passo, which actually I've just joined the management team recently. I'm super excited about it. I've been spending 40 to 60 hours on this company for the last half year. So a little bit more than just being an advisor. I was chairman of the advisory board, and being an early investor, I really rolled up my sleeve and got involved. But with Passo, and I look at our advisors and I look at our investors. We've got two guys from the Google Wallet team, and we're building the world's first shopper profile, which integrates directly into all the resellers and houses all your data, and you get control over your data, and they get all your data from across the internet immediately in every place that you go shop that we integrate into. And we've got Macy's, Nine West Group, J. Lindenberg, Media Zania, Bed Bath & Beyond. And now you house your data, so your data follows you around and you wind up getting the right suggestions. So the kind of people we've got is Sampo Parkinen, who sold Shop Tracker, or people like Nathan Lowe's invested in 120 different startups and was the head of the IBM Accelerator. He just got on a call with Terry from Macy's while we were sitting at lunch at the table. Not only did he invest money immediately in us, he picked up the phone, he phoned the CEO of Macy's and got him to take the call right then and there. We met him 3 days later. That is the kind of investor that is going to move the needle on your company. And they're also going to invest a lot quicker and probably a lot more because they know that they can offer tremendous help. And this means that you have to spend less time fundraising.
So this is like strategic investor who is really close, close to the business you are actually running.
Absolutely. And when I look at the people that we're speaking now for Passo to raise our next round of funding, we've achieved certain metrics. We have over 700,000 users. We've got engagements for 18 months with over 18 of the top retailers of the world. Like really, really great deals. Now that we're reaching out to raise our next round of investment, all the investors that we're speaking to, one of them used to be a top management in eBay, and he runs a VC here. Another one is entirely entrenched with over 4,000 brands. These people can help us, and we can also help the rest of their portfolio. So that's another thing that when you think about it from a strategic perspective, on the VC side, that's really awesome. But even the prolific angel investors are all thinking that way. They're thinking, I have these guys in my portfolio and I have those guys in my portfolio, and you could be the perfect thing, and all you guys could work together, and I can add tremendous value. This means I can strategically move the needle and ensure that I have a higher chance of getting my return on my capital.
But what about the syndicates? In syndicates, you have plenty of people, and it is very hard to get value from them because they are like no names in the big syndicate, actually.
Yes and no. you'll generally find that the syndicates all have a flavor and they have a focus. So just like any venture capital firm, a syndicate has a mandate. They generally will focus on fintech, retail tech, food tech, or something like that. So you won't go to a fintech syndicate and ask them to invest in retail tech or food tech. They're just not going to do it. They have a very, very clear mandate.
Okay. So but what about the network? Because it's pretty hard when you have plenty of these people. How the network in syndicate works, actually.
So look, I think two things naturally happen in a syndicate. Number one, yes, you're going to have a lot of money that's just money, but it's going to be run by someone in the syndicate who's going to be responsible for that. Now, that puts a lot of pressure on the person running the syndicate. And generally, the person who's running the syndicate will attract other people from their field who are angel investors from their field. So I bet you that those syndicates generally have a lot of people who are similar-minded and have similar focuses. So I don't think that it's completely, that the syndicates are completely full of hollow money. I think it could be a little difficult sometimes to reach the people in the syndicate because there could be so many people in the syndicate and trying to figure out who's who. And I think that kind of goes back to one of the most important things that startups need to really be focused on. Not only do they need to find investors that offer tremendous value, they need to be able to put the investors in a position that value can be received. So, I mean, I learned this with one of my startups where I had a horrible fail. And the fail was on me because I didn't communicate with my investors on a regular basis. I didn't bring them in completely. I almost kept them separated, because I didn't want to have, everyone kind of jumping on top of each other and, giving me hassles every day. So I kind of kept the way that I spoke with them pretty uniform and almost at an arm's length. And that was a huge mistake. Because when I think about it, if you are sending out a monthly financial, and you should be doing this anyways, by the way, as a startup, you definitely should be having a balance sheet, a cash flow report, all these things, okay? And I learned from my lessons, you supply these on a monthly basis. Be totally transparent. Every month, take a day, sit down for half a day and write down everything that's happening in the company. Don't just write the good stuff. Write everything from who's joined, who's left, what our difficulties are, what the bottlenecks are. These are the things that angels want to hear. It doesn't matter how strategic your angels are. If you don't involve them in this kind of a way and become very, very, very transparent, they're never in a position to really help you. Plus, they have a reticence to help you because they don't know what's happening in the company. So if they don't know what's happening in the company, do you think they're going to introduce you to new people? And I feel kind of a little bit, I don't really know what's going on. I've made an investment, but these startups, and that's a terrible position to put yourself in, especially when you've got a lot of strategic investors who could be really helping you to build the business a lot faster. So transparency, governance, all these kind of things may sound like horrible terms to startups who want to just go off and do their thing and not be controlled. You're not being controlled. If you create your startup in the right way, you put the right terms and conditions in place, you issue preferred shares. People want convertible notes on the early round, or even if it's equity, they're on preferred shares, which are non-voting shares, and you're on common shares. You still want to control the company, but you're offering transparency and visibility, which can only be phenomenal. There's, I love this topic, right? There's a company I really love, and they're called Pick Crew, PICKCREW, also known as crew.co. Now, they did something amazing. I sat down with a friend of mine, Elliot from Bold Start Ventures, and he explained to me, Eran, I love this investment. Why? Because it's like a pinball machine inside there. What they do is they keep everything transparent and everything open. And behind the scenes, they're gathering lots and lots and lots of data. And then every month, they release the data. Even the data of how much money they make, what their runway was, all the stuff, they're released in their blog. Okay, now you could join their blog and as a potential investor, be constantly informed because you're a current investor, but also as a potential new investor, especially for their following rounds, you'd have total visibility of what's going on. They don't do it so much anymore because they've kind of gone beyond that stage. And there are kind of two camps about whether you should be that visible or not. But what harm is there Tell people if you're failing. Tell people if you're struggling. Tell people if your things are going well or not going well. Tell them where you're finding difficulty and where you're finding success, and let them learn from that experience and brings them closer to the fold. So I really loved seeing this process, and they've raised a lot of money, and they have an incredible platform. I think that they're probably one of the best lead generation experts that I've ever seen in terms of how clever they are with their marketing. Really very cool company.
I have a question about how some works. For example, I invest my $100 or whatever amount it is. Is it I know which company it goes, or this money that will be spread on several companies to actually minimize the risk?
So yeah, you as an angel investor, you don't want to take all your money and just dump it in one company. I mean, it's like a stock portfolio. You're going to manage your risk. You're going to have a little bit of, you're going to look for some things which have a more volatile space, which are maybe a little bit more early stage, and you get a better deal on. So, that's what has to happen. There's if there are fewer metrics, if it's vaporware, if it's maybe a good team, but they haven't designed anything, there's no product, or the product isn't launched, you should be getting a better valuation. But if that's, and then you should be taking some of your money and investing it in companies that are maybe raising their Series A or their Series B, and they've proven out their metrics, or they're a seed stage company and the metrics are really, really solid. But you need to understand what those metrics are and what meaningful metrics actually really look like. Fred Wilson, I mean, I've got a couple of people for me are like the heroes of the investment space. And that I always like to quote. And Fred Wilson from Union Square Ventures is definitely one of them. You should definitely check out his blog, AVC. That's the 3 letters, AVC. Now, Fred pointed out something amazing, and when he pointed this out, it has a lot to do with understanding how much more mature investors are today versus how they were in 2008, 2010. 2008-10, people used to believe there were 3 reasons that you invest in a company: team, technology, traction. Now, the thing is this: team is still the number one, because an A-class team could take a B-class product and make, and just make a great company out of it. So team is the most important thing. Where did they come from? Do they have the right skills and understanding to solve this problem? Have they sold companies before? What is this team look like? Have they worked before together? All these things are great questions for the team side. For the other side, when you look at technology used to be a huge differentiator, but it's not so much anymore, because you could outsource your technology to Romania, to the Ukraine, to incredible places like that. You can get your technology built on a dime these days. There's so much open source stuff that never used to be there. So many tools on Amazon, on Amazon's cloud, that accelerate your ability to go to market. So technology is actually a lot less of a differentiator than it used to be. I still believe it is a differentiator, but I mean, it's a differentiator for artificial intelligence. I mean, you look at that Israeli company I was talking to you about. Yeah, it's a huge differentiator. These guys are probably top 20 artificial intelligence guys in the world, and their AI predicts the success of investments in motion pictures, television, and music at 65% accuracy, where the market is currently below 10%. That's huge. The value of the intrinsic value is the technology. But in a lot of consumer plays, a lot of other business plays, the technology is not actually the big differentiator, because it can be fixed, it can be rejiggled, it can be, with a little bit of money, you can fix it. So the thing is, that's changed a little bit. And the other view of traction has changed, because traction initially was, hey, we've got 700,000 users, we've got 1 million users. We ask different questions now that are more sophisticated. So Fred Wilson says there are 3 reasons that he invests: his team, total addressable market size, and stickiness. Total addressable market size is how big is the opportunity. And most importantly, this is kind of a little trap as well for entrepreneurs to see if they understand what they're selling well, because they need to understand the differentiation between the total addressable market size and the serviceable addressable market size. The total addressable market size is it's like saying digital marketing is worth currently $101 billion, which is inaccurate. By the way, that's an accurate number. Now, out of $101 billion, that's mobile digital marketing only. is worth in this year, if you're servicing that market, you're probably only servicing a small segment of it. How big is that segment? Understanding that is very important. The second thing, the difference between traction and stickiness is it's not just important to know how people have been onboarded, whether they're customers that have been onboarded, or whether with like big enterprise customers, or whether they are users. What we're interested in is the stickiness. How often are they using it? What does the daily active users look like? What are people doing on the platform, and how often are they doing it? Are they returning? On the business side, are they repeat business, or is it just one-off checks? If I've got 13 companies and they write off one-off checks, I can't understand the lifetime value of that customer. I can't understand the customer acquisition costs properly. But when I find that those customers have signed up for 3-year contracts and they're paying me $20,000 a month, and that's predictable revenue. And then over time, what I get to see is I get to see how they're using it and how much they're using it. The more they use it, the more I know they're hooked. And the more I know that we're going to have a sustainable business. The same with the users. The more that I see the users are active every single day, I can start looking and seeing what are they active in. I can understand what's meaningful to them. And then I can point my team in the direction of creating value for them around the things that they're most interested in.
So what are the most prospective markets from this point of view? What are the markets actually you are personally interested in to invest?
Okay, so I invest algorithmically, as should any savvy investor. What does that mean? You invest in what you know. You invest in the things where you understand the data that has come before. So if you bring me something that is solar, that is agriculture, I can't help you. You know, I have no experience there, and I'll actually tell you, I'm sorry. It's not just that. And even if you offer me an advisory board position, and I get offered a lot of advisory board positions, I won't take it because it's disingenuous and it's just wasting people's time. Things that I really like are crowdsourcing, marketplaces. I'm really enjoying food tech now. I'm involved in one food tech company. I'm enjoying retail at the moment. Very disruptive retail. Retail is kind of a really interesting one though, because I'm more interested in the data play than the product play. The product play doesn't really interest me that much. Really interested in the new way of work. Companies like Work Market or Pick a Crew. So I really know that, and I've got about 8 years experience in that field. So it's a place I can add a lot of value. I like market research. Really enjoying fintech at the moment, and loving artificial intelligence. And I'm kind of working on 2 artificial intelligence companies right now. So I find those both interesting. One is building a general artificial intelligence, which means like a human brain, building something like Watson, IBM Watson, but using biomimicry. So a very different take. We're looking at the way the human brain works and building an artificial intelligence based on the way the human brain works. It's beyond just being something which you have to teach constantly. It learns itself. So it actually starts learning from the interactions of things. It can look at shapes and objects and understand what those shapes and objects are without us telling it. And it can understand new shapes and objects and how they interact without us teaching them. And that's a huge leap forward from, like, let's say Watson, where right now you have to teach it. And I don't know if you ever saw those things that happened with Jeopardy. With Watson, Watson couldn't answer certain questions because they hadn't been taught how to answer those questions. This AI would figure it out itself. So that kind of thing, or the artificial intelligence, which is very narrow. I really love the assistants like Amy, which is awesome.
Perfect.
It's awesome, right? Yeah, it's incredible. Amy's amazing. And there's a few other ones that are really, really good in that space as well that I've heard of. Assistant.io is apparently excellent. And then the other one which I'm really enjoying is obviously Vault, V-A-U-L-T. If you want to check it out, it's Vault ML, which stands for machine learning.com, based out in Israel. And I think that those guys are going to literally revolutionize the entertainment industry. They can tell you how to launch movies, how much to invest in movies, TV, music, tell you with a 65% accuracy how much money you're going to make, when you should launch it, what demographic you should launch it to. It can change the industry enormously. I don't know if you know that 91% of investments in movies are a total loss. 92% in music are a total loss. And we have an opportunity to change that completely now with this technology. And it's self-learning. It's getting cleverer by the minute every time that we feed it new information. And you can feed it stuff as raw as a script. Just a script, simple script. And we've done a lot of predictive analysis, not just historical analysis of movies and TV, and it's very accurate. So I enjoy things like that. But generally what I've got to see is that it's going to make a huge change. It's going to make the world work better. I wouldn't want to say the world a better place. I think that's because everyone's going to go, Silicon Valley, you know. But I think you add new efficiencies, you disrupt markets by expanding them, or you solve really horrible problems and take away headaches that just don't need to be there. And I think that excites me. It has to have huge global, huge scale, but that comes back to a total addressable market. So, the 3 simple rules.
So you will predict the next revenue of the 8th episode of Star Wars with your artificial intelligence.
Exactly what we do. We did it for movies like The Revenant. We did it, and we did it predictively last year before The Revenant was released based on the script. And and in every single case where we showed if you invested the money using this technology, we far outperformed the market.
I think Disney will buy you, definitely, and will never show to anybody. Just like magic box.
That's a serious black box. But I mean, if you think about like with Amazon now, Amazon is making a huge play into not just into its own ecosystem, but into movies in general, investments into movies. Think of what an incredible tool this can be to Amazon and its shareholders to ensure that their revenues go through the roof.
Yeah, agree with you. And what can you bring to this artificial intelligence, platforms and startups? As you are not a mathematician, what will be your value proposition to this startup except of money, to be smart money?
So outside of capital with a company like this, there's a few things that I bring. And I don't invest a lot of money, by the way. I invest small amounts of money. I'm an angel, So I'm on the advisory board, and there's a lot of things I do for companies like that. One of the first things I do is, if you, I don't know if you've actually been to my website, Startup Hat, where I actually offer advice on startups and stuff like that. One of the services I actually offer is we design pitch decks. So when I say we design investor pitch decks, it's not we make pretty pitch decks. I think, first of all, we make some of the most beautiful pitch decks in the industry. We heard from a couple of VCs that the ones that we created for Vault were the best pitch decks they've ever seen in 20 years. So like some of the big guys. And so I'm super proud of our ability to do that and to creatively do that. But actually what we do is we fix the narrative of the company. And to fix the narrative of the company, you really need to think about what it is that you're doing. Any pitch deck has a very specific format, because you've got to pitch an angel investor or a VC. They're looking for the same story every single time. And they want your story to be framed in this way. And one of the most inspiring things that I've ever seen to learn how to do that is watch Elon Musk present Powerwall. And if you go to YouTube and watch the Powerwall presentation, it's one of the best frameworks for showing a problem and how you're going to resolve it. So I'm going to tell you how to do that, because I think it's a good tip, right? This is the narrative. First page, in 5 to 8 words, tell people what it is that you do. That's it, 5 to 8 words, no more. Second one, present the total addressable market size. Unless your team is incredible, like the Vault team, okay? Then put your team slide first. Second thing is present the problem. So frame the narrative, put the context down. This is the total addressable market size. This is how big this opportunity is. Then you go into the problem. You say, but there's kind of a problem here, and this is the data behind the problem. Always quote your sources on your problem. Once you've established that there's a problem, start indicating that there is a way to solve it, okay? And then show people what the solution is. Tell them this is what your mission is. And this is actually a slide that a lot of startups actually don't add, and I actually really love adding it in. And this is one of the things that you fix the company, you fix people's brains with, because they just want to say, oh, we build iPads, you know, and like Apple's new mission statement, which is horrific, is nothing like Steve Jobs' original mission statement. It's like, we build iPads and Macs, and it's the very best computers that we do. That's a terrible mission statement. Steve Jobs' mission statement was, we essentially, that's quote unquote, but basically it's to further humanity through the access to the very best tools in design and being able to disseminate and source information. That's the goal of Apple. And in Vault, our job is not to create an AI. No, it's to create a wildly more successful entertainment economy and ecosystem. And we do this by creating this artificial intelligence, by leveraging the artificial intelligence and quantitative strategies that Wall Street uses to make that happen. So it's about framing a narrative. Then beyond that, then we go into example of actually showing it work. If you can show a demo, brilliant. If you've got a 1-minute video, amazing. Show your product. Give people an understanding of how it works. Give a case study on showing actually that it does work. Tell people what you've accomplished thus far. Then tell people what you're going to accomplish. Then tell people what you need to accomplish and what you're going to. And by the way, what you're going to accomplish, you show. It's a really simple thing. At the top, you show the financially what you're going to accomplish, the users, and then at the bottom, show the product. You know, the product roadmap. And then tell people this is what we need in order to be able to accomplish this. Somewhere along the line, show a competitive landscape. Never, ever, ever, ever. Did I say ever? Ever say that you have no competitors. Because if you say you've got no competitors, I'll close the conversation then. You always have competitors. And you know why I want to see that you've got competitors? Competitors don't scare me. They excite me. Competitors mean that there's a mature marketplace that can be disrupted, or that can be, or that these people are out there and actually teaching the marketplace about what you're doing. You come into a marketplace, you've got to innovate. Innovation is the highest price of all prices, because you've got to educate the marketplace that you have a right to exist, you know, that you deserve to exist, that you're actually solving a problem. So the competitor slide is one of the most important slides. Then you have an ask slide. And the ask slide is really, really simple. And I really got to thank Elliot from Bold Start Ventures, who actually screwed my head on straight when I arrived in New York and taught me this. He says, there's only one way to ask for capital. How much money do I need? At what valuation? If it's equity, or what valuation cap if it's convertible note or safe note? What discount if it's a safe note or if it's a convertible note? How much? And generally, I want to see an 18-month runway. Runway means that I assume that if this company makes no money, this is the amount of money that I need to run the company and to achieve my goals, not counting revenues. So how much money do I need? What valuation and basic terms to give me an 18-month runway, and these are the use of the funds. That's what I want to see on our ask page. And when I hear something different from that, my mind already starts to switch off and away from you. And that's it.
Yeah, I have very different question. Yeah, you already were talking about artificial intelligence can predict if this movie will be successful, when you should release it and everything. How is your personal success as an investor? I mean, I'm not asking you exact figures, but for example, out of 100 companies you invest, how many survive this 18 months?
Survive the 18 months? I've only had one company that didn't survive the 18 months to make it to another funding round.
Okay.
You know,
how many companies actually became profitable out of?
So one of them got acquired before it reached profitability because it was useful to another company that we were working with. So profitability wasn't really, I mean, while we always were trying to create a sustainable and profitable company, the company flipped. In other words, and for people who don't know what that means, some investments are called a flip, which is you invest in the company because you know it's going to get bought out and you know who the buyers are. You shouldn't, I think in my mind, invest heavily in companies for the flip. You should always make sure that they've got a way of making revenue and a way of being valuable in the world and monetizing it. But some companies are just intrinsically for the flip. It's just how they are. Yeah, I think a ratio of about, with me, it's actually kind of a weird ratio, because the first company that I sold was, it was profitable, and I sold it to a friend, but it was a very small company. It was consultancy. The second company I sold was to flip. It was not to make revenue. We had no aim to make revenue.
But you did make money on it.
It was a design solution for designing 16 mobile phones. We knew we wanted to sell to one of the big European manufacturers, and we sold it 6 months later. There was no objective to go and build these phones ourselves.
Any phone we use now out of the 16?
Sorry?
Any mobile phone we use right now?
No, it was bought as a research project, and it affected the designs that flowed from around 2002 onwards. So they used them to get new insights on ergonomics, materials, how to treat the marketing, the design, and focusing more on the consumer and the interaction with the consumer. So that was integrated in. Then the rest of the companies, I'm trying to think, Paso is still early stage. Other ones are all early stage. The majority of the companies that I've had have mostly not. Yeah, I mean, one of them reached profitability for sure. It's funny thing with early stage companies, because a lot of the times also, because when they become profitable, they only truly become profitable in kind of their third or fourth, sometimes in their third or fourth year, because every single dime in the first and second year, even on top of the investment money, gets shoveled back into the company. So very often startups aren't profitable in the first or second year. It's only like in their third year that they start becoming profitable. So the answer is, I think, really 2.
So if you make a balance sheet, what do you think? You gain money or you lost money altogether as an angel investor?
It's a good question, actually, because on one startup I lost a lot of money, and it happens, and I learned a huge amount of lessons, which taught me everything for the future. And in the other ones, most of them are all still in play. I lost money in another one, which taught me everything about looking at the founder, especially from a tech founder, and looking for big red flags in the personality of the person. And there I lost capital. But if I look at what my portfolio is worth right now, I'm definitely up, without a doubt. But until the guys sign those exits or start paying their dividends, we'll see what happens. I'm patient. But every single one of them, I'm sitting there and I'm helping them every day to execute. That's for sure.
Okay. What expectations are the most important characters that should an investor have? Okay, patience is definitely the thing you should have, because you need to wait until the profit will come. But what else? What else characteristics?
I think humility is a very big one. I've met some investors who have massive egos, and I think you should chill your ego and just be present and add value. I don't care about how many exits you've had. I don't care about your experience and all that kind of stuff. You need to be relatable, and you need to be a value-adding investor, and you need to be patient. You need to understand the metrics. You need to also not be greedy. You need to understand the terms that you came in on, and respect those terms. You need to be helpful. You need to be a coach, not pushy. But I think you also need to be honest. And I think that's one of the biggest things that I've learned. You need to be very honest with the startup, and the startup needs to be very honest with you every day about where you're at. If you're irritated with the startup, sit down and say, listen, I'm irritated. It's like, I don't understand what's going on here, and help me to fix it. And if you leave it, you're going to get more irritated. So you're being forthright about these kind of things and not taking responsibility and accountability for your investment I think those are the two big ones. You want the startup to be accountable and responsible. You be accountable and responsible for your investment as well. Treat it like a real investment. I think these are some of the big things. But I found that one of the biggest ones is humility. You get some startup people, some investors or VCs that are just incredible. I mean, Mark Michelle from Metamorphic Ventures is incredible. He's like known as the rabbi of the New York startup scene, because you'll ask him any question, he answers you. He answers his emails. He helps willingly and openly. He takes people under his wing whenever possible. Or you look at guys like Mark Altschuler from Math Plus Ventures. Always happy to speak to any company. And when you look at them as investors, not only do they tell you yes or no, obviously, on your investment, and they do it quickly, so you don't sit around hanging around. And that's something investors need to stop doing, is stringing along startups. You're not going to do the investment, tell them you're not going to do the investment. You're going to do the investment, do the investment, and give them a timeline and stick to your timeline and be as accountable as you want them to be. Start off with a good foot. But with guys like Mark Altschuler, what's really amazing is that I funnel people like Mark, a lot of startups that come in through me, that I'm not maybe investing in, but I think are promising. And not only does he tell them why he is investing or not investing, even me, just as the person who does the introduction, he'll call me and set up a phone call with me and say, listen, we're not investing and this is why. And for me, that's incredibly meritorious. I don't care how big your deal flow is. I sent you someone, I care about it, I'd like to know why. So then I learn what to send you and what not to send you. And it puts everybody in a much better position. So taking the time to actually be that for the environment, to be the kind of investor that you'd want every startup to have, I think that pays a lot of dividends to you, to the startup, and to the ecosystem you work in.
It's a very comprehensive answer, actually. But what about the startup? What people do you want to invest in? Who are they?
Yeah.
Humanity.
So generally, this also goes back to the startup. One of the best ways to actually approach an investor, whether a VC or private individual, is to actually be introduced through a CEO he's already invested in. That counts a lot for you, right? It helps me to reduce my due diligence enormously on you as a person. I want to see that you understand the space. I want to see that you've had experience in the space. I want to see that you are able to build a team that's not just you. I want to see who that team is. I want to know how you're going to go about getting that team. Because without that team, it's just you, I'm never gonna open up my wallet. Doesn't make sense. I want to see that you approach me in a way that you communicate really, really well. For example, when you write your first communication, that you understand who I am in terms of my background, and you write towards my background. That you actually care, and you didn't just send a blanket email. That you understand my mandate. That even if I say no, I want to see what kind of person you are. How do you take that? I want to see that you're reliable, transparent, that you have a lot of passion to solve the problem, but you also have a lot of analytical ability to look at the problem and know what's right, what's wrong, not just about the problem, but about the way you're going about it at any point in time. Ego, same thing. I want to see, zero ego at the table. I want to see a person who was passionate about solving a problem. And I think these are the most important things. I want to see someone that I can work with for the next 3 to 5 years. And I think one of the most important things that I learned from one of my investors, and took me a while to learn as well, is coachability. So transparency, coachability, ability to see that, and that goes back to ego, that I want to see that you can learn and you have a willingness and propensity and deep desire to become better. And one of the things that I always look at is the people that you surround yourself with. So to startup entrepreneurs, be careful on what you post on social, because I will look into your social, and choose your friends carefully, and think about the marriage of your professional life, the person you want to be, and the people you surround yourself with. And today, as a person, I'm fairly mercenary on a lot of things in my life. I'm mercenary about what I eat, because I love nutrition, and I love feeling good and waking up with my brain clear every day. So I'm mercenary on what I eat. I'm mercenary about training every single day, so I've got a healthy body and a healthy mind. But I'm also become mercenary about the people I hang out with. And I ask myself, am I in the right place in the right time, surrounded by the right people and the right tools, doing the right thing. And I've had a lot of life lessons, especially in the last 2 years, to ask those questions and make sure that I'm on that path. And when I come in to help a startup as well, and I sit on a few advisory board seats, and I help the startups to do everything from, like I said, redo their pitch deck, redo their narrative, their story, find out what the missing holes are, and then get all the tools that they need. Open up my network of investors as well as business development. That's another thing, by the way, I look for is, can I help you in terms of business? I want to see you move the needle. But when I think about all of these things, and I think about the lessons that I've also learned personally as an entrepreneur, because I'm still an entrepreneur out there, I think about what I want to cultivate in myself, and I try to surround myself with entrepreneurs who want to cultivate that in themselves as well.
We have a public question. Eran Eyal from Calgary. Basically, it's a long question, but he's saying there are plenty of people who has an engineering background and technical background, but they are
incredible.
They're focused in business. How would it be an advantage from angel point of view, or would it be a disadvantage? What do you think?
Sorry, I know a bunch of people from Calgary, and well, this guy's not from Calgary; he's from New Brunswick. But I know a few people from Calgary. Calgary's amazing. They've got a lot of technical talent. There's some investors there. There's kind of a drought of investors in Canada. So Canada's a hard investment space. I know it, by the way. I was going to move to Halifax before I moved to New York. So I kind of know a little bit about the ecosystem. Okay, it's incredible how tech smart they can be, while at the same time novices in business matters. So, yes, I do. And this means, and this is why the power of two is actually the power of one is the power of one, and the power of two is like the power of 20. Because there are two people that need to make up a startup. Okay, a hacker and a founder. The hacker is someone who's incredible with the technology or the integration solution, whatever it is that's going to make the product work, and then they may have some business savvy, but then they need to marry themselves as quickly as possible with someone who's very passionate and incredible on the marketing, sales side, fundraising side, and business side. So putting yourself into an accelerator is a really good thing to do, because very often you'll find some people similar to you there. That's one way to do it, or an incubator. Go to a lot of meetings, to a lot of meetups. There are no meetups happening, host your own meetup. Okay, go put it out on Facebook. Go put it out everywhere you can. Make your own little group, and let the right people come to you. Go traveling. Go see where to some of the neighboring states. Go to New Brunswick. Go to Halifax. Go to Nova Scotia. Go to definitely go to Montreal. Go hang out at Founders Fuel for a while. With the awesome guys in there's some of the coolest guys. I mean, in Toronto, and Founders Fuel is in Montreal. I mean, some of the coolest people out there. There's lots of money there. There's lots of great, business guys. And marry yourself to someone as soon as possible. Because the problem is, if you can only create the tech solution and you can't find a way to sell it, then you're going to have a huge, huge issue. Once again, it comes down. If I look at, I think about Paso, right? Okay, Paso. I bring some business acumen to Paso, definitely, and I bring product knowledge, marketing. Very much like CEO-like level activities. But my colleague Stephen Gray, he's without a doubt the best salesperson I've ever met in my life. I mean, he kills it. He crushes it in sales. He gets people to sign deals at retail level that takes 6 months in a month. Now, that makes such a huge difference to the business. But we're very cautious about what he does, what I do, and we make sure we're complementary. But when we have conflict, we have an ability to resolve it together. So you've got to find someone that you can actually work with, and not just who's got the financial savvy. And upskilling yourself also as a tech person with financial savvy is not a really difficult thing to do. There's a lot of great books that you can go out and read. There's webinars that you can get onto. Devote 1 hour a week just to reading a great book on business matters, and you can skill yourself up very fast. What I will give you as a tip is that the two most important people that you can find when you start up a startup, whether you're alone or anyone else is with you, is a lawyer and an accountant. A great accountant or great external CFO to help you to build your business model and to make sure that your books are transparent, 100% correct, help you make good business decisions, save money, all these kind of great things. From day one, find the best person. And the other one is the best person you find, a lawyer. When I think about my lawyers, a guy called Adam Snukel. He's in Israel, used to be in New York, and he's a partner and shareholder at Greenberg Traurig. I sent everything to Adam because Adam not only is an incredible a lawyer, and don't go pick a guy who's got a, who's got a small business down the road. Go find a firm that is national, or that is global, like Greenberg Traurig, where, there's a huge network that you can tap into no matter where you go to. And also the VCs respect them, by the way, and the angels respect a proper lawyer who helps you do everything right from day one. You don't deal with extra legacy. But let me tell you, I was told this, by a really, really amazing entrepreneur, successful entrepreneur and investor. And he actually said to me, Eran, these are the first two people you need to find. And I never understood really how important it was. But when I found Adam, I found that not only did he open up, the Greenberg Traurig network to me, but as a client in all the startups that I bring to him, he opens up his business network to me. And think about all the deals that he's doing. He has huge connections with all the deals that he's done. He's done over 500, he's done over 500 venture deals to date. Now this guy basically knows all the venture capital companies. He knows all the investors. He knows the brands. He knows people that you could be doing technology partnerships with. He could be giving you business advice and showing what's good and what's bad. He's going to give you the best contracts based on, having seen the best contracts come out and seeing what happens. So find these people and make sure that you built to win.
Talking about lawyers, you have graduated from law school, have you?
Pardon?
You have graduated from law school, have you? Talking about lawyers.
Yeah, I studied law and then decided when I majored in legal studies, English and psychology. But actually, I didn't finish the LLB part. I just saw what law was about, and I didn't enjoy it. The funny thing is, I used to be in a back brace when I was at school. So about this thick, about that thick, a plastic back brace for 3 years. So I wasn't allowed to do sports. So when everyone was at the beach, everyone was doing sport, I was actually working at a law firm in South Africa. And I loved the law, and I was so excited about it. But then when I kind of got into understanding what it was about, I just wasn't interested. And my brother was one of the most successful, well-known successful technology startup entrepreneurs in South Africa. And I saw him build his first startup, and he took me under his wing and mentored me. And I just went off and created my own consultancy and pursued that. Then afterwards, I went to go study graphic design. And funny enough, I dropped out of graphic design because an angel investor saw what I was working on with the telephone project, and he said, Eran, listen, if you drop out tomorrow and do this, I will give you the money to do this. And I said, you know what, I can always go back to graphic design. Dropped out the next day, and 6 months later, we sold that business.
Sounds really impressive. And the last question for today.
Very lucky. Not very impressive, very lucky.
Okay. Because we are a little bit out of time. Why New York? Why not San Francisco?
Why not?
Why not?
Why
New York? Why not San Francisco?
Love San Francisco. Spent 3 months in my last startup in San Francisco and Palo Alto. Amazing people out there. Incredible venture capitalists. Great ecosystem to go raise capital. When I stepped foot in New York, I knew I'd found home. There's a pace that exists in New York. There's a culture that exists here that isn't not like the one that in San Francisco. San Francisco is more like Cape Town. It's a little bit more laid back. It's still like people work crazy hours, and there's a lot of money and innovation happening there. It's incredible. But in New York, there's this crazy pace. Plus, the startup that I came here was media focused, and it was focused on I needed agencies and I needed media companies. But just the culture of New York is incredible, and the pace keeps it going every single day. The people are amazing. They're very open. I found San Francisco was a little bit difficult for me socially. It was almost like Cape Town. It was a little cliquey. socially clicky, and I found it was a little bit like that in San Francisco. I was very lucky that people introduced me to new people, and they took me in, and once you get into the kind of the groups and the cliques in San Francisco, they're very hospitable and very warm people. But here, people are just a little bit more open, I found, in New York. I love New York. I think it's the best city on earth. There's amazing startups here. Is capital as easy to get in New York as in San Francisco? I don't think so. In fact, I know so. That people are more willing to pay for innovation there than here. Here in New York, people want metrics. They want traction. And they want to, and if you think about where the money comes from algorithmically in New York, this is a space which is about monetization. And in media, in Wall Street, in all these things. But truly, I just love New York. It's incredible in so many ways. I couldn't begin to describe.
Yeah, okay, we can talk about New York till next Tuesday. But I don't
can.
I will talk about New York.
It's an amazing city.
Okay, and really last question, because we're going over now, which is a bit too much. If somebody who's watching us now or will be watching records want your advice, want your money, want your head, the brain, I don't know which part of you, can they do that? How can they approach you?
So I've just written in the chat, the best way to get a hold of me is on www.startuphat.com. That's startup, like startup, and hat, like a hat that you wear, because you wear many, because in a startup, you have to wear many hats. So startuphat.com is probably the best way. You can book time with me to get advice. You can reach out to me on the contact page. I try to post some information there. You can also follow me on my Instagram handle, which is @startuphat.
I'll publish all the account. Don't worry about that. Yeah, I'll do that. No problem. So everyone who's watching us or will be watching the recordings, I'll publish everything on our webpage, landing page for this particular interview.
And one of the big things I just got to say is, outside of anything, it's not a question of whether I'm going to invest in you or not, or join an advisory board, or any of these things. I like to help. And if I can't help, I'll tell you straight away. Don't take it as an insult. I'll tell you straight away, I can't help. But if you're in a position that I can help you in terms of stage, in terms of vertical, in terms of the person that you are, or any of these things, I love helping people. I've been the recipient of so much help that I'm incredibly gracious for. I believe you have to put your best foot forward. If you want to hear, if you want to contact me, you want to find out what I'm up to, if you want to find out about my investment portfolio, if you want to find out about Paso, Bolt, any of these kind of guys, please reach out to me. I'm happy to talk with anyone from an investor to a startup person.
Okay, I think it's all we have time for tonight. It depends on where you are. Thank you very much, Eran, and thank you everyone who was with us. It's a new format with us. For us, we will be doing these things more often, I guess.
So bi-weekly, we will have the format and you guest on it.
Okay.
Awesome.
Thank you very much, and goodbye. You stay here, but thank you very much, and goodbye for everyone.
Thank you for the privilege of being able to share.